Good morning, everybody, and welcome to the Alpha Pension Group Retirement Recap for Monday, April 13th. With me, our Chief Investment Officer, Rob Milas, and our lead consultant, Mark Salamone. Rob, I'll turn it over to you to talk about what's coming up with the markets and a little bit what happened last week.
Yeah, Thursday was kind of quiet, a 1.5% increase for the S&P 500 that brought the index up, though, for a 12% gain for the holiday shortened week, which was fantabulous. It was the best showing since 1974. But the real action was in high-yield bonds, which enjoyed their best day since 2008 on Thursday when the Fed announced that they were increasing their lending programs for distressed credits. So that was interesting news that came out on Thursday. Also, over the weekend, I'm not sure if folks saw it. Normally, it would be the headline news, but the Krakatoa volcano in Indonesia erupted. It's one of the most powerful volcanoes in the world, and if you haven't seen it, it's worth a look. But similarly, the Fed's balance sheet is also exploding. So last week, the Fed added another $393 billion to their balance sheet, bringing it up to about $6 trillion. So again, we've talked about how much the Fed is putting into this economy, and that's just a signal, and it will continue to grow. This week is going to be very interesting. It kicks off the Q1 earnings, and that starts with big banks. And investors are really going to be looking at the credit card business, and in particular, how much charge-offs the banks are taking. And that will give us a signal of how deep this recession has really impacted investors and the public in terms of how many people might be defaulting on their credit card loans. And then finally, investors will be watching, and all Americans and maybe all the world will be watching as the clinical trials really kick off, and we really start to focus on which vaccines and treatments have the best chance to make it to mass production. So busy week. Last week was a short week, but an important one just the same.
Thanks, Rob. So listen, building off that momentum, in 2008, at the last financial crisis, right before that, the Department of Labor blessed the target date concept in retirement plans. And looking now ahead, almost 10, 12 years later at the next financial crisis with COVID-19, looking at the target date funds, they've actually done fairly well and held up very well in many cases. One of the things that the target date funds do is they allocate you to make sure that based on your age, you have the appropriate amount of risk in your portfolio. And with the markets, these have changed a little bit. And Rob, I know you have a thought on as to why that might not necessarily be a bad thing.
Yeah, I think they definitely have changed. In general, they've gotten more diversified. And while that diversification benefit typically dissipates during a huge market correction, it's still there. So think of it as a shock absorber. It really helps you on the small bumps, et cetera, et cetera. It does help you on that big pothole, but you're still going to end up going, feeling that pothole. So if you think of it in those terms, it's really been beneficial for those target date retirement investors to be a little bit more diversified.
Absolutely. And again, they've held up well, really cementing themselves as a core part of an investment lineup in a retirement plan, which is great. But still, we need to caution you because every target date fund is not built the same. So as the saying goes in our industry, our jargon is either it's a to or through fund, meaning this fund is going to bring you to your retirement date or it's going to bring you through your retirement date. So that alone will tell you that the composition of that portfolio is greatly different, and we always talk with our clients to make sure they know what they have. Going back again to 2008, some of those target date funds were down over 40%, and like you said, Rob, the absorbing of the market these days is much better. And Mark, I know you have some good news about the stimulus checks, which are starting to come out from the IRS, I believe this week, right?
That's right, Rich. Yes, this week the stimulus checks have started to hit everyone's bank accounts that have chosen direct deposit. So for those people who have filed taxes in 2018 and 2019 and have chosen direct deposit in the past, well, good news. You've most likely received that stimulus check by now. So that's great news, that getting that money into the economy as quickly as we have. The other great news is for those that haven't chose direct deposit, you still have an option to get your money a little sooner rather than later. waiting for the paper check may take some time. So for those that have not had their direct deposit information set up over the past couple of years when they file their tax returns, they can go onto the irs.gov and start to do that and hopefully get the money a little sooner versus waiting for a paper check. So good news all around that money is finally coming out and going to the people that need it.
Thanks, Mark. And hopefully this week you can give us some information that some of that SBA lending money of the Paycheck Protection Plan will start to hit the small businesses. So we hope to hear on that pretty soon as well. So thanks so much for joining us on this Monday, and we will see you tomorrow.